What's up, guys? It's Dan from Coin Bureau Trading, back at it again with another crypto market update. Today, we're going to take a look at exactly when altcoins are going to pump. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, ping that notification bell. Before we get started, guys, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome. The more difference of opinion we have, the better traders, the better investors we're all going to become. With that being said, guys, let's jump straight into it. The first thing that I think a lot of people are overlooking, of course, when the crypto prices are down, everyone just assumes that the way that things are now is how they're going to continue to be, that it's just going to continue being whatever it is now. This is the biggest mistake in crypto, I think. You always have to be asking yourself what comes next. And in this case, what comes next starting tomorrow, the 18th of February, FTX repayments are set to begin. This is for creditors with claims with less than $50,000. So that's basically retail investors that were using FTX. They're scheduled to receive roughly around $1.2 billion of stable coins to their accounts starting tomorrow. According to this Sunil guy here, who's one of the FTX creditors, he says that roughly 340 million has not KYC'd yet. So it looks like it'll be closer to like 900 million. Regardless, guys, chances are that some amount of that money is going to find its way back into crypto. If you need a more concrete source, if you're saying, oh, it's just another, tweet thread or whatever, here's the official source from the FTX official X page. You can see here that it confirms that the reorganization, whatever legal term there, starts February 18th, and that eligible creditors should expect to receive their distribution within 1 to 3 business days from February 18th. So basically, in the coming days, there will be a redistribution of these funds. Again, this is going to be paid out in stablecoins, I believe, through Kraken and BitGo. So basically, retail investors are going to be getting around, at least if this Sunil guy is accurate, then roughly $800 or $900 million of stablecoins to their accounts. And again, I do think it's likely that some of that capital will find its way back into crypto. Does that mean that there's going to be an up-only day starting tomorrow? No, but this is kind of like on the crypto side, one factor that is going to be supportive of altcoins and of the crypto market. I guess what I'm trying to do here, and I'll just clarify, I'm setting the stage that, basically I'm underscoring a crypto specific factor that's going to result, let's say, in like more support for the crypto market. And now I'm going to turn over to a macro factor, which some of you may have heard about. And this is the Treasury General account, which is basically like the U.S. government's bank account at the Federal Reserve. As some of you may have heard, the debt ceiling was recently hit. And what this means is that eventually the U.S. government is going to need to start spending money out of this account because they're not able to issue more debts to finance their spending. They'll have to use the money in their bank account, basically. So it's kind of like instead of paying with a credit card, they have to dip into the savings, so to speak. The practical effect of this is that it's basically bullish for overall liquidity, basically like in the markets, and liquidity is just a fancy term for the amount of money in the markets in the economy. The moment that this starts going down, you're going to have up to $800 billion, well, 828 if you want to be exact, $828 billion that could be injected into the economy and the markets in the coming weeks. This drawdown hasn't happened yet, but it's expected to begin by the end of this month. This is according, again, not to me, this is not according to some random Twitter thread. This is according to Andreas Steno Larsen, looking very professional here. But in all seriousness, this guy is a very well-respected macro analyst. He's done some contributions, I think, in CoinDesk. He's also been active on Real Vision, and he also runs his own hedge fund, I believe, now. And he was basically explaining in a recent interview, all this FUD around QT and that nothing's going to, like, altcoins can't rally because of QT and all this stuff. He basically did a 50-minute interview where he explained why that's BS and why there will be liquidity tailwinds specifically from the TGE, which he actually doesn't think is that big of a deal. It will be drawn down, he thinks, by the end of, or the drawdown will start by the end of the month. But the bigger factor in his view is the fact that basically banks are starting to lend more. There's starting to be more bank lending. And of course, it's not just the Federal Reserve or the government that creates liquidity. It also comes from the private sector. It comes from bank lending. And what Andreas has noted is that there's been a huge uptick in bank lending, and this is going to be positive overall for liquidity. And of course, that will feed into the crypto market. But again, that doesn't necessarily mean that it's going to be up only, or that the crypto market is going to start rallying tomorrow or later this this week. That's not what I'm saying. What I'm saying is that we have on the crypto side, again, with these FTX repayments, we have kind of like a factor that is supportive of the crypto market on the crypto side. And then we have a factor that's supportive of the crypto market on the macro side. So it's basically positive liquidity on the crypto side, positive liquidity on the macro side. And this creates the perfect environment basically for altcoins to pump. And the only thing that's missing there is a catalyst, right? You need a, it's like you have the firewood is there, the kindling is there, but you need a spark to start the fire, right? And this is where things get interesting. I guess to quickly recap here, guys, for those of you who haven't been keeping up with my videos, what I've been underscoring is that there's a very strong correlation between Ethereum and most altcoins as measured by others. If we switch between these two charts here, you can see quite clearly that Ethereum and others, like the charts here, look almost identical, as you can see. And this is not a coincidence, guys. And I do think that the reason why, I mean, there's many structural reasons for this. For example, most altcoins that have economic value are on Ethereum. That means they trade against Ethereum. That means they're dependent on the liquidity conditions on the Ethereum blockchain, which is driven by Ethereum's price. Like I can, I can go into more details there, even in terms of like how ETH is used as collateral on Ethereum, which of course is the biggest chain for DeFi. So when ETH's price rises, more people borrow stablecoins, and those stablecoins find their way into altcoins, typically in Ethereum's ecosystem, which is again where most altcoins with economic value are found. I know that there's lots of altcoins on Solana as well, but most of those cryptos do not have economic value. All those tens of millions of meme coins that are being made, everyone's saying, there's all this dilution, and that's why nothing is pumping. That's not really true, because most of those meme coins don't have any value at all. But anyways, guys, the point that I want to underscore here is that basically, if you, I'll put it through this way, if you can kind of, let's say, predict or forecast what's going to cause ETH to pump, then by extension, you will be able to predict/forecast what's going to cause altcoins to pump as a whole. And this is where things get interesting, because some of you may have heard that there is a big Ethereum conference every single year that's held in Denver. It's called ETH Denver, obviously. And the conference will begin on February 23rd, which is actually next week. And it will last between February 23rd and March 2nd. So basically during those dates, you can expect to see big announcements, not just from Ethereum, but there's going to be big announcements from other big crypto projects like Hedera, Stellar. I suspect that even XRP could be launching the EVM sidechain around that time, or announcing the launch at least, because it would make sense, because this is like a very big thing around Ethereum. A lot of crypto projects are holding like side events. It's not going to happen at the conference, but they're holding like side events around these dates. So all these other major crypto projects are also going to be making announcements in addition to Ethereum. So again, what I'm basically saying here is, again, positive liquidity conditions on the crypto side with FTX repayments, positive liquidity conditions with the Treasury General account being drawn down, and with increased private bank lending, according to Andreas Stone Larsen. So we kind of have like the nice environment for an Ethereum/altcoin pump. And then the question is, okay, what is the specific catalyst that could, again, keyword, that could cause that pump in ETH and altcoins by extension? The answer, in my opinion, is the ETH Denver conference, which is coming again February 23rd, which again is right in the middle of this time frame where we're going to see FTX creditors being repaid. We see the TG starting to be drawn down, and then on top of that, we start to get bullish announcements out of ETH Denver and other bullish announcements from other crypto projects around that time. And taken together, that suggests that we should see a recovery in ETH and then altcoins by extension, which again, look at the correlation here. And, the main reason, again, if in case it wasn't clear enough, the main reason why altcoins have been underperforming so much is because ETH has been underperforming so much. The moment that ETH starts to recover is when we should see altcoins start to recover as well. Anyways, guys, so again, the catalyst there, I believe, is going to be around the ETH Denver timeframe. If it's not ETH Denver, then it's probably going to be something related to staked Ethereum ETFs, which the New York Stock Exchange has been pushing the SEC to approve staked Ethereum ETFs. And I do think that this is something that a lot of asset managers are pushing for. And I do think that this is something that will come in the coming weeks. Will it come by the end of the month? I honestly don't know. But this is another catalyst that's independent of ETH Denver that could also result in more inflows into ETH, which again, combined with these positive liquidities on the liquidity on the crypto and macro front, could cause an ETH pump. And with all that being said, before I forget, I do need to show the CoinBureau deals page here. In case you haven't noticed, we were using Binance there. We have a 20% trading fee discount and up to $600 in bonuses. These deals don't cost you a thing. You get a trading fee discount, the exchange gets a new user, and we get a cut of the trading fees. That's how the CoinBureau makes its money. And if you watched last week's video, you guys will know that I actually went long ETH with our institutional account here, and that position is still open. That position has not changed, and I will update that position as required. Or I guess like give you guys an update when it's required. Right now, I think it's just minorly in profit, or just I honestly don't know. I haven't checked, but the point being, guys, yeah, I do think that ETH is going to see, again, as you can see here, guys, this Bollinger Band moving average on the monthly has been a strong zone of support for ETH ever since the crypto market started recovering in 2023. And the fact that ETH is holding on to this level is what leads me to believe that, that altcoins have also probably bottomed around here. And this is even further confirmed by the fact that altcoins themselves have held this trend line, basically since 2023 as well. Since the crypto market started recovering, altcoins as a whole have held this trend line. ETH has held this trend line as well, or rather this moving average, and the two do seem to correspond. And this is part of the reason why I do think that we're close to a bottom here, and I do think that the bottom is probably in for most alts. Everyone's calling for another 25, whatever it is, 20, 25, 30% downturn, name whatever bear you're talking about. But in my view, that's extremely unlikely, because you would completely break this bullish formation, this bullish, basically higher lows price action. That whole structure would be completely broken, and we would actually be entering a new bear market in that case. So you better hope that those bears are wrong, because the results would be that we enter another, however many long year bear market. Is that, again, we have bullish crypto. This is objectively speaking, okay? This is not like an opinion thing. Objectively speaking, we're going to see hundreds of millions of dollars of stable coins being returned to retail crypto holders. That's one thing. We're going to see potentially hundreds of billions of dollars drained into basically injected into the economy and the markets, starting at the end of the month from the Treasury General account. We're seeing, in addition to that, probably hundreds of billions, or at least tens of billions of dollars being lent out in the private lending, or rather by banks, which is also boosting liquidity. And this creates the perfect conditions, again, for crypto to rally. It doesn't mean that it's going to happen tomorrow. It doesn't mean it's going to be up only, starting at the end of the month, but it does create these perfect conditions where all we need really is a good catalyst, is we need some bullish catalyst to come and bring the attention back to crypto, ensure that those capital flows, that increase in liquidity, that it does come back in the crypto. And again, I do think that we're going to see a lot of announcements there around the ETH Denver timeframe, because again, it's not just Ethereum that will be making announcements. There are other crypto projects that will be making big announcements as well. And of course, we will see, by the looks of it, not only staked Ethereum ETFs, but lots of spot altcoin ETFs being launched, which is also going to attract attention to altcoins, obviously. Anyways, guys, with that being said, I do need to show the Coin Bureau Club here as well, as where we do deep dives into promising small cap altcoins every single week. The way that we basically choose those altcoins is we do an altcoin review poll every single week. The way that we pick the altcoins in the poll is based on a combination of our research as well as the suggestions of our members, and whichever altcoin wins the poll is the one we review. We have a research feed where I'm sharing basically everything in this video that I'm sharing is stuff that I've been posting about a lot in the research feed, and of course other members of the research team are also sharing their insights there. We have a crypto portfolio, or a team portfolio page rather, where you can see which cryptos we're holding and which cryptos we're considering adding to our portfolios. We have an exclusive deals page where you can find discounts on crypto analytics platforms, and we also have a members Discord where you can ask us questions, and where I'm doing deep dives into, or rather doing technical analysis into Bitcoin, Ethereum, and select altcoins every single day. And I guess to continue on this train here, one thing that I posted about recently that I was really underscoring is that a lot of what's been happening in the crypto market can be explained very simply by the structure of the crypto market and how liquidity has been flowing. And you can kind of separate it into institutional liquidity flows and retail liquidity flows. What institutions like is or rather what they need is a crypto blockchain that is secure and that is liquid. That's basically Ethereum. So the question is, why aren't they using Ethereum? Why aren't they investing on Ethereum or whatever? The short answer is that they actually have been, because we have seen, some tokenized real world assets launching on Ethereum, which I do think is going to be the primary avenue by which liquidity flows from the institutional front. I'll explain that in just a second. But the short answer basically is that, I guess the actual short answer is that regulations have prevented institutions from really getting very involved on Ethereum, from issuing more types of assets and stuff like that. I do also think that institutions or asset managers, they want to know that they can trust the leadership, which is why we're probably seeing shakeups at the Ethereum Foundation. I do think that's related to asset managers that want to make absolutely sure, before they issue trillions of dollars of assets on a chain, they want to make sure that the chain can be, I guess on a cynical take, is that they want to make sure that they can control that chain, or they can have at least some influence on that chain, right? And that most of that influence comes through the developers. And that's true for any crypto for that matter. But with that being said, those are kind of like the two big hurdles that I see is, again, regulatory, that that they're still waiting for more clear regulations around that, which are coming. And then they're also waiting for changes to be made at the Ethereum Foundation, which are currently underway. And once those changes come in, this kind of, almost exponential growth we've seen here in tokenized real world assets on Ethereum, this is going to continue rising. And this, 8 billion will go to 80 billion, maybe 800 billion. And what do you think is going to happen with all these real world assets on chain? They're probably going to be used as collateral in DeFi, and you're going to see institutions basically borrowing stablecoins against this collateral in DeFi, and then probably investing that money into other altcoins or other stuff. And then that's just like the institutional side, right? Basically, the key takeaway there being that because of institutional activity on Ethereum, this is going to increase the liquidity on Ethereum. And because, again, most altcoins with economic value are on Ethereum, most altcoins with economic value in general are on EVM chains and other chains that are very, I guess, today, very easy to bridge between Ethereum and all these other blockchains. You're going to see a lot of that liquidity flowing onto other chains that are connected to Ethereum, not just Ethereum, and that will find its way into altcoins. And then, of course, on the retail side, the thing to watch is that basically, the lowest barrier to entry for retail capital has been basically these like crypto wallets like Phantom, which is why we've even seen Phantom flipping Coinbase in the App Store as people go and trade these meme coins. And the thing is, guys, that it's not necessarily the meme coins. It's the fact that it's for retail investors, the path of least resistance is actually to interact with a blockchain that has low fees, that is super fast and has a good user experience, and that's basically Solana. And in my view, the reason why Solana has done so well, again, it's not, it's like people are saying, oh, it's because meme coins are pumping, that's why people are going there. But I think it's actually the other way around. I think people were going there because it was cheaper, it was faster, it was easier to use. And then just the meme coin craze, it could have just as easily been an AI agents craze or some other craze. The fact that it was meme coins, I think, was just a coincidence and ultimately an artifact of the fact that Solana had used the bonk meme coin as a way of basically re-energizing its ecosystem after FTX collapse. And I think that this bonk meme coin and these other WIF and these other cryptos that followed in its wake, this is what really unleashed this meme coin craze. But it could have just as easily been something else. And I think that the main reason why so much capital flowed into Solana, again, this was mainly from, I guess you could say, from retail. I would say from experienced retail investors, not new retail investors. But the reason it flowed there was because it was cheap, it was fast, and the user experience was good. And of course, Solana is not the only chain that falls under that umbrella. We also have Sui, which also integrated with Phantom, and we also have Aptos. And I think this is the place that is kind of being overlooked, let's say, that I do think that on the institutional side, we'll see basically lots of liquidity going onto Ethereum because it's the most secure and the most liquid from the institutional perspective. But on the retail side, I think we're going to continue to see capital moving onto Solana, and then now probably moving more so onto Sui and these chains that are competing with Solana. That's probably where most of the retail capital will go. And you have to basically ask yourself, what is the equivalent of meme coins on Sui? What is the equivalent of meme coins on Aptos? And if you're a member of the Coin Bureau Club, you'll already know which ones those are, or at least in my opinion. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.